Oh yeah, let me hit the record.
Folks, sometimes you just need to talk to a lender that you trust because they are the ones that are in the game. They are looking at many files. And I have two thoughts about the housing and real estate market. Again, when I say housing, I mean single family homes. And when I say real estate, I mean commercial. So we're going to talk with Dustin from Convoy Home Loans and figure out what's been happening in the last couple of weeks. How you doing, buddy?
Good. How are you?
I'm doing well. So let's just catch up real quick. What's going on with rates over the last couple of weeks, mortgage apps, things of that nature. And then I'm going to share with you an opinion I have that may or may not surprise you.
Love it. So, we haven't been on in 2 or 3 weeks, whatever it has been, and I think the consumer has noticed that rates have dropped quite a bit. I think, at the first and second week of June, treasuries were in the 4.4, 4.5, 4.6 even range.
Yep.
I think presently today we're right at 4.28, 4.3, but for about a week, we were in the low 4.2s, 4.2,
Yeah.
4.21. And as we've discussed, a lot of our rates on the non-QM side will follow the 5-year treasury. So we had a good, 20, 30 basis point reduction, which is always nice for the consumer to see rates go down rather than up. But of course, in the last day or two, we've seen a little 10
Mhm.
basis point increase. So it's so common now. It's so
Yeah.
you
It
know
really is.
it's nothing that I don't think should change really any
Yeah.
investor consumers approach. But what we've seen, I think it's the third consecutive week of mortgage applications being
Yeah,
ticked
it
up.
is. It is. Yeah.
Um, it's look, consumers, doesn't matter what they're trying to buy, always are looking for a deal. And when you see rates above 7 on the average 30-year fix on Google, whatever you're looking at,
Right.
as a consumer for 4, 5, 6, 7, 8 months, and then now you see it, just below 7 or 6.8 or 6.9, you get out of your seat and you're like, that's a deal. I want it. So I think
That
that's
is.
contributing to it.
Yep.
But yeah, I'll let you go ahead.
Yeah, a little bit more on that. I think you are so right. The consumer who I've studied for the better part of 30 years is a predictable creature, at least in mass. Maybe I can't predict individual behavior, but in mass, you could generally get the direction correct. And I actually am fairly confident that the magic number to unlock meaningful marginal demand is actually 6.7%. Why 6.7%? You have access to this. If you go back and look at your charts, the last time we were below 6.7% was well over a year ago. So, what's going to happen when we eventually get there is people are going to look at that and do exactly what you just said. That's a deal. And it's going to be done in mass. What we're seeing today, to your point, is getting sub 7 unlocks a little bit. The magic number for, if you're in the real estate business, transaction business, I think is 6.7%. And, you know, could we get there this year? Sure. Could it be next year? Sure. But I don't think it's unreasonable to think that we'll be above 7% forever. Right. I think 6, 7 is out there, and it's probably out there, less than a year, in my opinion. So what do you think of that?
No, I think I would agree. I don't know exactly when it's in the near future. I've been telling this to a lot of clients, but I don't think look, obviously if the Feds were to cut rates, it's going to transpire right now into mortgage rates being reduced. I don't think that happens until after the election. I know a lot of people are saying the
Me too.
economy is slowed down enough for a September rate cut.
Not
July is
me.
off the table.
Yeah.
um, we're so close right now, and on Monday and Friday of last week, where the average 30-year fix was like at 6.86. So it's not that far, right?
Yeah.
Um, Today we're at 7.01 or whatever it might be.
Right.
But I think what's we keep saying it is that this normal trading or much narrower trading range is now slowly starting to settle in with consumers and
Yeah.
understanding that like we're not going back to 4, we're not going back to probably even 5 anytime soon. It's going to take
No.
um,
And
the
hopefully we're
normal
not going
cycle
back to
10
eight.
years.
Yeah.
Hopefully not back to 8. That would shock
That
everything.
was painful. That was painful. Eight was painful.
It was wild.
Yeah.
But it's going to
Yeah.
take time, right? Like this is a slow,
Exactly.
the real estate game is a slow game. Whatever part of real estate you're in, on the buy side, sell side, investing side, affordability side, right? It's a
Yeah.
slow game. So understanding that is
I love
important
that.
because consumers saw it move so quick, way too quick, right?
Yeah.
From COVID to now, that they're thinking, okay, it can go from 3 to 8, it can go from 8 to 3 in a year too, right? But no,
Mhm.
that's obviously not the case.
Yeah, I love that. I love that. One of the things that I don't know, I'm not going to call this a prediction yet because I'm not really convinced it's true, but I'm certainly thinking about it. And I want to ask you this because again, you're seeing lots of investors and a lot of files. You already mentioned it. We're pretty close to the election. I believe I'm, let's call it 52. So I've seen, what would that be? I don't know, 8 election cycles as an adult, right? 8 or 9 election cycles as an adult. Most of those I don't think has really impacted housing. It hasn't caused the consumer to delay purchases. I believe what is in front of us is one of those election cycles that is going to be so much animosity, so much just yuck that it could cause a decent amount of folks to just say, "Hey, too hard. I'm going to wait till after November." What do you think of all that? Is anybody talking about that, or just am I just overthinking it?
I don't think you're overthinking it, and I know there's going to be some must-see TV tonight,
Yeah, that should be
in
fun.
the debate, so that'll be fun. But no, I don't know what the number is, but the amount of the investors and clients that I've spoken to that are saying, "Hey, I kind of want to sit on the sidelines to
Yeah,
see what happens
just
with the
time out.
election."
I'm gonna. Yeah, and again, I think it's
It's 4 months
normally.
away,
Yeah, it's
right?
4 months away. Normal elections don't cause this. I mean, if you go back and look historically, election cycles really hasn't. I haven't seen a pullback in real estate transactions. I think this election is going to cause a lot of people to go too hard, too risky. I'm going to wait. And I think we start to see it right now. So, what does that mean? We just got pending home sales. I don't know if you saw it this morning. They were negative 7.7% last month. They were negative 2.1%
Oh,
this month. So, it's like a negative on a
yeah.
negative. How, new home sales were down. Dude, I really think the next 4 months is going to get super slow.
No, I agree, and it's been a interesting report to follow because inventory is slowly building, right?
Yep.
And you would think that okay, like inventory slowly building, then new home sales should be in a typical if we look back at it, following the same progression, right? But you know, affordability almost at a all-time low,
Yep. Almost.
pretty much right there anyways. And there's, essentially three different things that are going to affect affordability. It's rates, which are high. It's going to be income needs to increase, which, is not a quick, easy fix change for a
Nope.
lot of people.
Yep.
And then, home prices,
Right.
right?
That,
Uh,
that's the formula. You've got three levers to pull on. That's it.
yeah, and that's not something that all three of those are not easily fixed in
Yeah.
a quick time frame. So
Exactly.
um it's just we're in this, and we're going to ride it out, but it is good for investors. I think it's great for the market. I think it's great for housing in the long run. It may not
Yeah.
be where you want right now, but that's the only way to really fix this.
Yeah. Well, I want to close on a positive note because I think a lot of this conversation probably has been perceived as negative, but I want to end on a hyper. I am more excited personally. And again, you can't call me a home buyer, right? I've already got the two that I've got. I'm not in the market for a third. But as an investor, I am more excited about the next 5 months than I've been excited about the last 3 years. Why do I say that? Because I love a slow housing market. I love the fact that I can just watch the data. I can look for the opportunity. I can get creative. I also know there's a crazy amount of stress coming in the small multifamilies, 5 to 50s, which I would love to pound a bunch of equity into. I am just super excited. And I'll just give you a real life example. I have receipts. Matt, the mortgage guy yesterday, he's looking to buy a property perhaps in Sacramento on the market 88 days, has had 3 price reductions. Seller owns it free and clear. So guess what you should offer? You should reach out to them and say, hey, how about you seller financing this? And oh, by the way, Dustin, I will give you yesterday's price if you give me yesterday's interest rate.
I love it.
This is what's coming to the people that do the work.
No, and that's the beautiful part of being an investor in real estate right now is you should be excited, right? This is what you want. In a lot of the first 10 minutes, however long we've been on speaking, it was more geared towards, right, your first time home buyer, the
Yes.
millennials that are they're peaked up in terms of interest, right? It's the issue of the move up buyer not being a part of the equation anymore because they can't afford to move up. They probably can't even afford the house that they got 2 3 years ago,
Yeah,
5 years ago
exactly.
with today's rates. So how are they
Exactly.
going to possibly, move up? And that's a different problem, but that problem should be treated more so as an opportunity if you're an investor right now, because I see it right now on two sides, right? I see it from our clients that are asking for pre-approvals, asking for multiple pre-approvals on different properties, sending 10, 15, 20 offers, a month. But I also see it from my investors that own real estate that are trying to sell, that are coming to me now saying, look, I've got 7 properties that I've had listed for, 6 months. None of them are selling. I'm not going to sell below my price that I need it. So I want to refi it. Let's get it stabilized. Let me get some cash out. And the
Mhm.
amount of refis that Convoy is doing right now for essentially our clients that have expired or about to be expired listings, right, is probably the highest that I've seen realistically
Mm.
in the last 3 years. The
So let
amount
me let me
of,
po- let me poke at that a little bit. Now, are these folks just
yeah,
looking to refi the debt so they can hold on and keep the listing going, or are they going to do some long-term rental or some other exit?
a lot of them are rentals. They want to just keep it now. They're going
Just
to, ride
yeah,
it for a year or 2 years, whatever it might be, because,
exactly.
when you have that portfolio that you may have built over the last 2 or 3 years, and the plan was to recycle and sell. Well, your plan to recycle and sell isn't going to work if you sell below the price that you need it to be, right?
Right.
But you can keep that plan intact as long as you're able to cash flow in the meantime by getting a
Yeah.
rate that's stabilized enough to pay the rent. So a lot of our investors, knock on wood, are in the position where they need to sell, right? Or we
Mm.
wouldn't be, helping them with the refinance. But we're seeing a lot of it, a lot of people coming to us, to refi into long-term debt that they essentially want to now hold as a rental rather than sell.
And that's why it's funny. I went on record earlier this week saying that the inventory building is going to roll over because I think there are a lot of folks who have days on market at 75, 80, 90, shoot 100 that are just going to pull it off the market. A lot of these newer forecasters are like, oh my God, inventory is building, price crash is coming. I'm like, no, morons. There's going to be a percentage, 10, 15, 20%. When the listing date gets to some number, they're going to be like, okay, no interest. I don't have to sell. So I'll just pull it off and wait till April. I'll list it next year. So I think we're going to
Yep.
see inventory, the wish pricing or whatever you want to call it, it's going to roll over.
I 100% agree.
Very, very cool. Well, again, folks, as an investor, I am more excited about the next 5 months than I've been the last 3 years. If you are a first time home buyer, it is tough out there, but don't forget, you could do the same thing I am. Make offers on properties that have been on the market like 88 days in my Sacramento example. You too can ask for seller credits. You too can ask for seller financing. So as a first-time home buyer, remember, you can get creative too. And if you want to partner in this, there is no one better than Convoy Home Loans. How should they reach out to you?
Yeah, just go to our website, convoyhomeloans.com, and click the drop down to mention you came from ORAT.
Yep. If you came from ORAT, there's a good chance you get this gentleman here, Dustin, or his partner in crime, Jonathan. So again, tell him you came from ORAT so you get taken care of. Thanks, buddy.
Thank you.